out on. But now on to our movers and shakers segment, where we track a whole host of stocks that are on the move. Now, first up, let's talk about Sammaan Capital and what is the reason for the move in today's trading session. Gaurav is joining with us with more details.
Well, yes, when we look at Sammaan Capital, now IHC is going to acquire majority stake of around 41.2% in Sammaan Capital. They have entered into a definitive agreement with the company. With this, they will be investing 8,850 crores in the company. Remember, this will be an entry point for IHC in Indian financial segment, and at the same time, this is also the largest ever primary capital infusion by investor in an NBFC in India. When we look at the deal, let's see how they're going to go about it. Board has now approved preference issue of 33 crore equity shares, which will be valued at around 4,587 crores, 31 crore warrants, which will be valued at 4,262 crores. And apart from that, this will also trigger an open offer, and for that, 34 crore more shares will be floated for a valuation of around 4,750 crores. Remember, the entire deal is going to happen at 139 rupees per share, and extraordinary general meeting now that will also happen on 29th of October, where they will seek shareholders approval for preference issue and also for amendment of AOA. When we look at the overall news flow, it is actually positive for Sammaan Capital. In fact, management also said that it will provide long-term capital, it will improve credit rating, and at the same time, it will also strengthen the governance support for the company. Remember, for the last few years, we have seen Sammaan Capital trading below one-time price to book after the IL&FS crisis. So definitely, it is going to be a positive news flow for them. At the same time, now JP Morgan, they are also a little bullish on the company. What they're saying is that RBI approval is a key thing to watch out for, and they're also expecting 6 to 9 months for the entire transaction to get completed. We earlier spoke to the management. They sounded optimistic. They said that by FY30, ROE is going to reach over 3%, so definitely a positive news flow for the company. As of now, we are seeing some kind of profit booking because over the last 5 days, we have seen the stock has moved up almost by 20%, but definitely we will be watching out on this stock from here on.
Gaurav, thanks very much for that. So that's a big deal in focus. In fact, we did speak to Gagan Banga, who's the MD and CEO at Sammaan Capital. Listen in to excerpts from that conversation.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Okay, so that's the big stock in focus. But other stocks in focus include V-Mart. Manglam, you're looking at that. Tell
us. A good update is what has come in. You know, the street was expecting good performance in the second half of this year. They've gone ahead and done that in the second quarter already, with more triggers for the second half, which has the street excited, which is why the stock is up nearly 7.5% in an otherwise wobbly consolidatory market as well. What is good? 22% sales growth, 807 crores, and it's been led by same-store sales growth, which have come in at 11%. Remember, same time last quarter, they did just about 1%. So on the back of a 1% growth in the first quarter, 11% growth is a big jump, and the street likes that, which implies that there could be margin expansion this time around as well. They've opened 25 new stores, so total store addition this year so far has been 38 as well, which is pretty much in track, if not ahead, of their annual guidance of 60-65 stores being added. So all these work well for them, with the near trigger where the company had told us very recently that they should touch 20% growth in the festive season. They've already done that in the second quarter, and there would be an incremental 5 to 7% growth due to lower GST. Add to all of this, there is that incremental trigger of the Bihar election towards the end of this year as well, which typically increases their revenues post the election outcome. So as a result of which, that stock fairly well bet. But